Make no mistake, Bitcoin is going to create a new all-time high before it gives us a gut kind of drop, signaling the start, of course, of the next painful bear market. However, the market will usually give us some signals before everything goes to the crapper. Problem is, nobody wants to believe those when they're happening. This time will be different, and it's done so in the previous cycles, and I don't think it's going to break that tradition this time around. Can always happen. We don't have crystal balls around here, but stick around till the end and avoid being the one flipping burgers during the bear market instead of sailing away on the yacht with the wife and the kids and having a good time. Just because, of course, you take a screenshot of your portfolio doesn't mean it's real. You got to remember to cash in, okay? And I hope that some of these indicators are going to show you that that is still coming for us. Because unless shit really hits the fan over trade wars and inflation soars back with a vengeance, which can happen, or we have some unforeseen black swan event that comes about, then right now we're approximately mid-cycle by most accounts, by most of the indicators we're going to look at here today. Now, to be clear, the cycle could finish as soon as April or May, or it could even peak in late 2025, or as some ancient astronaut theorists suggest, extend all the way into mid-2026. Aliens. But these indicators will help us keep cool heads in 2025. So let's get it. First, the global M2. In the sober world of economics, it isn't a sequel to a sci-fi movie. The global M2 is the money supply, okay? It is the measure of the world money supply that includes cash, checking deposits, saving accounts, and money market funds. It's the economic equivalent of your wallet, your piggy bank, and the coins under your couch, except this one has a lot more zeros at the end of it. This gives us a glimpse of how much money is actually floating around in the global economy for people to invest, spend, or of course FOMO into risk assets like Bitcoin and dog coins. Historically, Bitcoin market cycles have been closely correlated to the global M2 money supply. Of course, if supply is going up, that means that more money is available for investments into the markets. So let's take a look at this chart here from B Geometrics. The black line is the Bitcoin chart, the blue line is the M2, and the green area is the percentage growth of M2 year on year. As long as the M2 supply keeps going up, then historically speaking, that means we still have fuel left in the tank to go up. You have probably heard about this a lot of times. However, you probably haven't heard of this. The year-on-year percentage increase or decrease might actually be the more smack in the kind of face indicator that you're actually looking for. The percentage spike of the year-on-year growth is actually closely related to the cycle peak. In 2013 and 2017, cycle tops were lagging, but in 2021, it peaked before we reached 63K, which for some is the real cycle top, not the 69K that was reached much later, which by most technical levels showed that 63K was top. 69K was a bit of an aberration. It's a different story. Also, notice that the best times to buy were during negative year-on-year growth periods. So right now, it seems like we're kind of in the middle. We still have a lot of momentum and we haven't seen the year-on-year spike yet. By the way, if you're a cryptocurrency trader, you want a great place to be trading your crypto coins, I recommend BitUnix. Go check it out. It's a no KYC, no VPN, no BS exchange. All you do is click on the link down below, deposit some cash, start trading, have a good time. Okay, so they got very deep liquidity for all the top markets. They have got all the hot new altcoins listing over there all of the time. Plus, there's a limited time deal that if you click on that link down below right now, you'll get a 20% deposit bonus. That means you deposit $1,000, you get $200 back, which is a crazy, crazy deal. Limited time offer. Go check that out using the link down below. Thank you very much. Now, the second indicator that we should be paying attention to is the DXY, or the US dollar index, which measures the value of the US dollar relative to a basket of foreign currencies, including the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. In short, if the dollar strengthens, Bitcoin goes down, and vice versa. Now, we actually saw that this week around the trade war, tariff stuff. The DXY spiked, risk assets, Bitcoin, Ethereum, all that stuff went down. Just look at the charts. In previous cycles, Bitcoin made all-time highs when the DXY was actually at the bottom. Now, I'm pretty sure a lot of you already know this, but the question is, will it go up or down from here? As mentioned, we don't have crystal balls around here. No, not made out of crystal. So I cannot say for sure what's going to happen. However, we can look for some clues. First of all, in Trump's first term, The Dixie actually went up after he won the election, but then, closer to inauguration, it lost steam and went down after he was sworn into office. Now, Trump has stated he wants a weaker dollar. And here's the interesting thing. The DXY is currently nearing the run-up after the election last year. So right now, we're waiting to see if Trump 2.0 will indeed drive the DXY down again. Currently, of course, we've seen tariffs spiking the DXY back up in the first weeks of the Trump presidency. Will those tariffs derail US dollar weakness, which has been so widely expected in 2025? Time will tell, but most analysts are still expecting a dollar index decline, and Trump himself has stated he wants a weaker dollar. So we should have a lot of room left to see the dollar index decline, pushing risk assets up. The next one to keep an eye on is the price of copper and gold. And I know that sounds like a bit of a weird indicator, but let me explain, particularly the ratio between copper and gold. See, copper is considered as a key industrial metal, so its price tends to rise when the economy is strong and the demand for goods is high. If you think about it, almost all consumer goods, of course, appliances, electronics, cars, man, everything's got a little bit of copper in it, okay? So when the economy is doing good, bada bing, bada boom, price of copper goes up. And then, of course, gold, it's gold, man, boomer metal, right? It's the safe haven asset. It's also in a lot of industrial goods, to be fair. It does have very strong industrial use cases. And its price often tends to increase during times of economic uncertainty and recession, but also, when we see economic booms happening because you need gold in phones and stuff like that. But, usually people look at gold as, okay, risk is coming, cash bonds, gold time. Okay, fair enough. But of particular interest in this chart that's been posted by Ostium Labs, it shows here the relationship between copper and gold and the peak prices in Bitcoin. Now you can see an incredible correlation here. The peaks of the copper-gold ratio have basically always coincided with the Bitcoin peak price. And that right now, the indicator is far from peaked. In fact, the indicator right now is showing that it's probably gearing up for the massive markup phase. Again, mid-cycle. The drawdown's been largely completed. Now it's ready for the markup phase, which markup phases are usually pretty violent. Now let's talk about the ISM Purchasing Managers Index, or PMI. This is a monthly survey that assesses the economic health of the manufacturing sector. Interestingly, there's little known correlation between the PMI and the BTC charts. When we overlay these charts, we can see that the peaks of the US PMI tend to align with Bitcoin's cycle peaks. Everything in crypto is just a damn proxy for the US economy and the US markets. It's crazy. Anyway, for instance, in March 2021, the PMI peaked at around 64 before declining. At that time, Bitcoin reached price $63,000. Bitcoin reached $69,000 in November of 2021. Damn, that's crazy, a long time ago. Before dropping as the PMI fell below 60. A similar pattern occurred in 2017. The good news is that the PMI is still moving sideways at the bottom of the chart and hasn't really started to peak yet. So again, more mid-cycle than late cycle, right? Now the next one, very, very popular, and you probably know about it already. We've talked about it a few times before. It's the Pi cycle top indicator. Now, in a nutshell, this indicator has predicted the top of the previous cycles. It tracks the 111-day and 350-day X2 moving averages. So when the 111-day crosses above the 350-day X2, it's a strong signal. Run for the hills. We're cooked. Now, I know it sounds a bit simplistic, maybe even a bit confusing. But let's just have a look at this chart here from BitBo. The blue-green line is the 111-day, and the 350-day X2 is the purple one. Now, this signaled on April 5th, 2013. Bitcoin peaked 4 days later. It happened again. December 14th, 2017. Bitcoin peaked 3 days later. And it is the same story in April 2021. Again, we're not really counting the 69K top because most indicators showed that April, for all intents and purposes, was the top. And had you sold in April and walked away, you would have made so much money, it would have been ridiculous. Could have come back to play later in the year, but you didn't have to. Now, after the signal flashed, Bitcoin reached 64K just a few days later. And I know, again, 69K was the peak price, but 63, 64 by most indicators showed a real solid peak area. El Salvador gave us the 69K peak. Because if you had sold at 63, 64K, you would have been a pretty happy camper. If you sold your altcoins 2 weeks later, because altcoins tend to lag a few weeks behind Bitcoin, you would have been pretty happy too. Sell near the cross. Okay. Next up, we have the RSI Bollinger Band percentage phases. This one we're borrowing from CryptoCon over on X. Great guy, go follow him. He made this interesting chart. This chart has a lot of things going on, but it will give us a good clue what's going to happen next. Basically, the chart divides the cycle into 5 phases, namely the bear market breakout. The second one is the first cycle breakdown, recovery, followed by the second early top, the all-time high breakout, and ultimately the Pico cycle top, okay, which has not come yet. So far, according to this chart, we're done with the fourth one, which was the all-time high breakout. The previous cycle top occurred 44 to 51 weeks after the fourth phase happened. So if this chart remains accurate, then we're looking at a September or October top for Bitcoin. And since we love confluence, this also amazingly coincides with the theory that Bitcoin tops 500 plus days after the Bitcoin halving. And to reinforce our theory that we still have some fuel left in the tank, the stablecoin market cap has surged past $200 billion, adding $40 billion since Trump's election win. Fiat, of course, is not converted to stablecoins just for the heck of it. People want to make money. Buyers bring in their dry powder to scoop up assets, which of course ends up driving asset prices higher. So based on the data, based on the indicators that we're seeing, we probably have not reached cycle top yet. In fact, we're probably more like mid-cycle approximately, which I'm tired, boss. I'm tired. Can we get this thing over with already? Come on, let's go. I got some shoes to buy. Some are saying too, this time could be different. Trump's, 4D chess policies are about to break everything, bring recession in much sooner than expected. We have the yield curve that's uninverted, all that kind of stuff. So which one are we going to believe? Again, don't have a crystal ball, but I personally believe the market owes us, well, the market actually owes us nothing, but I personally believe the market is going to give us at least one more nice push into April or May potentially. Perhaps we even run as far as late 2025. And if you're real crazy, maybe 2026. Majority of the indicators I'm looking at are showing be patient, still a lot of fuel left in the tank, approximately mid-cycle, lots of room left to go. Also remember, these charts are not infallible. They are only correct until they are not. So you have to be on the lookout for news events, market sentiment, chart movements, all this kind of stuff. Thanks for watching.